Okay, thank you, Bucci. How are we all doing? Good morning, good morning. Welcome to a beautiful week, an amazing week ahead. For a matter of fact, I believe that this week, we're going to do amazing things by the special grace of God. God has given us life to come into the week, so He has things expected for us. So, the XY from last week, just during the CPI. We went bullish on the XY on the CPI. My analysis was to go bullish on the DXY. I was kind of expecting that prices will return into this originating block here, this demand here before going up, but we saw prices respecting this one instead here and then starting to move to the upside. But I'm still waiting to get a proper shift. Okay, we're stuck in some sort of consolidation here. So either we break above it and retest it, or we sweep the liquidity just below it here and then continue to the upside. But overall, you can start to see that markets is has shifted. Here we have this area of imbalance here. Okay, so I have one and two. So this area here is a good area to possibly target for prices to get to. Okay, and then yeah, so I'm looking for to see the dollar go bullish back to 105. And one of the things that is going to propagate the movement of these prices to 105 is first going to come from fundamentals that we have this week. If you were on the Q&A session yesterday, I did tell us I was going to talk about fundamentals a bit more today. And so let's look at the possible fundamentals for the week. Sorry guys, I need to shut some things down. I think it's making my system slow. Just a moment. Just hang on with me, guys. Let me fix something quickly. Okay. All right, let's close this. Okay. Yep. Yeah, I believe you can see my screen now, yeah? Okay. Okay, so this is Forex Factory. This is one place you come to look for. Now, let me state this again. I stated it during the Q&A session yesterday evening. Fundamentals is not only but limited to this, to macro releases. And I think that's the major mistake that most traders make. Um, they think this is fundamentals. They think this is everything they come to see on Forex Factory or my FX Street is fundamentals. That's not fundamentals. This is this is one part of fundamentals, and it's the mistake that a lot of us make. And hopefully over time that you stay with me long enough, you'd be able to correct it. Fundamentals isn't macro releases. Macro releases are just another part of fundamentals. Fundamentals is the totality of events and economic decisions that make up or shape and shift economies of the world. That's fundamentals. So your macro release might be good, but that's not the only thing for you to consider. You have to consider other things like, are there wars? Are there um are there government issues? Are there government policies restricting certain things? Um, is there a shortage in the supply of a commodity? Is a country in debt? Is a country interest rates too high or too low? At the end of the day, what sort of inflation is a country experiencing? Is it a costful inflation? Is it a monetary inflation? What exactly is it? What kind of inflation, and how do those inflations affect at the end of the day? So these are some of the things that you need to pay attention to. It's not just okay, CPI is greater number than this, or no. Those ones would only make sense if they tally with the overall fundamentals that is affecting the economy. But if it's not matching up, is where you is where you most likely find that, the release is saying something and prices are doing something completely different because you didn't look deep enough. You just took what is on face value, and you're trying to make sense of it. You get. So let's look. Monday. What do we have today on Monday? So on Monday we had the Chinese industrial production year on year retail sales. Week is the week of retail sales. Okay, keep that in mind. You're going to see a lot of retail sales and interest rate decisions from major countries: Japan, US, UK, Euro. I think Euro had their own last week. Yeah, I think Euro was ahead. They had their own interest rate decision last week. Was it last week or was it their CPI? I can't remember. But I think most of them are going to have interest rate decision this week. And interest rate is a very important thing because it can either chase away investors or invite more investors. So a rate cut might signal strengthening of an economy. And if an economy is strong, they don't necessarily want aggressive investors. Keep giving you guys free nuggets. Listen to me again. If an economy is strong, they don't necessarily need aggressive investors. But if an economy is suffering, like Nigeria, then they need aggressive investors. And the one way to bring in aggressive investors is to give them higher returns on yields or higher yields. So you notice that when inflation is high, or there's a recession or something or whatever, you notice that the Federal Reserve or the central bank starts to hike interest rates. I think that what is Nigeria's interest rate? Let's use this as an opportunity to study here quickly. Let me show you. Let me show you guys. Um, so what we then want to do now is ask, what is Nigeria? What is Nigeria Nigeria's interest rates today, and just see how much their interest rate is. I just want us to say as high as what their interest rate is. Can you see 27.50% is what our interest rate is. Now, let's go back to Forex Factory. Now, look at of Forex Factory. What can you see? GBP 4.5%, USD 4.5%, AUD 4.10%, NZD 3.75%, Canada 2.75%, Euro 2.65%. Can you see that all this now US is still saying, you know what, our interest rate is too high. We're still trying to balance out inflation. It's bad for the economy. USD is hitting, as at last year, we're hitting about 7 point something percent on interest rate, and they were already screaming, we're in a recession, we're in a recession. What then would we say in in a country like Nigeria where our interest rate is 27.5%? What do you think is currently happening to us? Now, use this opportunity to ask yourself again, is so these are certain questions that you need to get very inquisitive. We're trying to understand fundamentals, that you're not just understanding fundamentals based off the roots of, oh, Forex factory. You need to go in and say, okay, what does it entail for an economy? Because the mistake all of us make is we we think we think that what do you call it? We think that it's about the currency, forgetting that the currency also is an indicator of the wellness of the economy. So leave the currency sometimes and focus on the economy so that the currency would make sense. Because if the economy is bad, the currency might be bad as well. So economy might be bad and currency might be good. And the only reason why currency is good is because there's an introduction of aggressive investors. And now the problem with Nigeria here at the moment is we are not even welcoming investors. Can you guys hear me? Is my network unstable? Okay. Sorry guys, if you can hear something and state that you can hear me, let me be certain. Why is my system slow?
But you're sounding very clear.
I'm sounding very clear, but my system
Mhm.
is my system is lagging. Just a moment, guys.
Oh,
Let me open up my tax manager. I'm trying to understand what's making my system lag. Okay, so you can see right now, if you guys can see my screen, you can see that Nigeria is currently expressing high headline inflation, primarily driven by what? By food inflation, with recent data showing a surge in prices and higher year-on-year inflation rates. Do you know what the food inflation rate in Nigeria is currently? About 36%. Can you see? In 2024, it was 33.95%, with food inflation surging to a record high of 40.6% at the end of 2024. Now they need to balance this out because the majority of the things we eat are imported. Agriculture is not moving due to insecurity and all of these things. So you need to understand the CPI based off, see, Nigerian CPI, Consumer Price Index, rebased in 2025, stood at 24.48%. This is our inflation rate. And countries like US and co are complaining and shouting, oh my God, our inflation rate is going above 4%. We can't handle this. We need to work on this. We need to 4%. 4%. Your country is on 24.48%. So now you understand why their interest rate has to be that high because, well, they need aggressive investors to hold the economy. And the annoying part about it is all our investors are not even investing in Naira. They are not investing in Naira because they need to apply a sensible dollar cost average to their investment. So now they are always going to do what? They are going to invest in the economy in dollars. And why they are investing in the economy in dollars as well is because your country needs to pay back its foreign debt. And the only way your country can pay back its foreign debt is to pay in dollars. So if you invest in Naira, it's going to become too expensive for them to purchase the dollars to pay back their foreign debt. So you see how messed up your country is. So you're not asking yourself, why are things not working? These are some of the reasons why things are not working. But let's keep that aside and let's go back to our Forex factory. Okay. So now looking at our Forex factory, what are some of the things that I would be expecting this week? We're expecting core retail sales on the USD. Now, what exactly is core retail sales and what is it really about? Now, core retail sales is the change in the total value of sales at the retail level, excluding automobiles. So basically, this is every mm, um um minor thing that can be bought. So things like food, drinks, phones, everything, but excluding automobiles. So excluding when they use automobiles sometimes on this thing on your macro releases, it's basically if you see things like excluding agricultural industry or farming industry, it just tell you that excluding like menial jobs or excluding like when you see automobile now, it's trying to tell you excluding high voluminous purchases, maybe like buying cars, tractors, buses, and all those kind of things. They exclude those ones. So they leave it for just the minute things like your everyday shopping, groceries, and all of those things. So if retail sales, for instance, now, okay, say actual greater than forecast is good for currency. So we apparently now we is in percentage. So we want to see a higher percentage, meaning that people were able to purchase more goods than they did in January because every release you see, another good thing to take note of is every release you see is not for the month of March, it's for the month of February. So if you're getting releases in March, it is a lagged information in respect to what happened in February. So what happened in March or what is happening in March, we'll get to find out in April. So that's one thing. So don't think it's for this month, it's actually for last month. So now actual greater than forecast is good for currency, meaning that a higher reading is going to state that what is going to state that people were able to do what to buy more things than they did in January, in February. Now, what does that also tell us? It then tells us that for people to be able to afford more than normal or buy more goods than they did in January simply means that something has changed. Either more people have been able to attain purchasing power or purchasing power has therefore increased, meaning that salaries had gone up or people had gotten more jobs. So stores are now recording higher purchases, which is good for the economy and is good for the currency because it means that people now have enough money to spend, people now have enough jobs, and also apart from people not just having enough jobs, earnings have gone higher because the more you earn, the more you spend. Is the law of money dynamics. The more you earn, the more your appetite for things would increase. If you were living under $100 before and you've grown your income to $400, you most likely would move from that constraint of having to use just $30 a month to eat, and you might go up to maybe like 50 or $60 a month to eat, and that's totally fine. So it's the same way the Bureau of Statistics calculate some of these things. Okay, they use it to gauge to understand. So if we get a higher number, then it's good, stating that okay, people were able to there's money in circulation, people are earning better, so they can spend more. So that's how you look at it. It's not just the number that is the case. Now, another thing you need to also pay attention to is the deviation. So it's something called a deviation. Okay. It is the difference between the previous, the actual, and the forecast. It shows you the strength in which you should follow. So take for instance now, forecast is 0.3%, previous was 0.4%, and what is the actual going to be? So what you're going to do is you're going to take a deviation. Now, how to calculate deviation is simply this: the previous with the forecast and the actual of last month together minus the forecast of today. So if we get anything above 0.3%, as much as it can be good for the dollar, for the currency, but in a total rundown, how well did it do? Because you can see we had a minus 0.4% in January, meaning that people could not even afford shit. It means that jobs were tightened, everything was just too stringent, and people were not even spending money. People were saving money instead. So nobody was spending money on like the basic things. So we had a minus 0.4%, meaning that today, if we're going to get an extremely strong dollar that is going to lead us throughout the week from retail sales or aggregate us into understanding what the other releases are going to be about, we are going to need to see anything about 0.5%. Why is that? We want to be able to cover up the previous of 0.7%, okay? 0.7% in January, and then that was from December. That was December release, 0.7%. And one of the reasons why it was this high was is festive period, obviously. So people will spend more money. So from 0.7%, they were expecting a forecast of what? Of 0.3%. And what happened? Prices came out minus 0.4%. That it was two times lesser than what was expected. So meaning that prices fell instead of 0.3%, prices fell 0. Point what? 0.8%, meaning that we would need a higher reading, an extremely high reading of like 0.5% for us to be able to balance out and now say, okay, you know what? We are we have a deviation of what? Of zero point 0.3 now. So which is good, which shows like a very solid increment to the upside or aggressiveness of improvement to the upside. I know some of these things I'm saying might make you sound cuckoo, but it's just how it's calculated. Financial markets can be crazy. Yeah. So it's just the deviation that we're going to look at because even if it comes out as expected, it won't have much impact. We need the numbers to be extremely high, okay, for it to have as much impact. That's month on month. Then we then have retail sales. Okay. Retail sales is the change in total value of sales at the retail level. So this is like the complete, this is what the overall is going to be. You can see it was 0.9%. Remember when I said at the end of the day it was 0.8% that was lost from the market? This is it. So 0.9. So we need an extremely high number to even this 0.9. So we need to push the 0.9 at a deviation of minus 50. So we want to do minus 50% from it. So we need it to come back to like minus 0.4% or minus 0.5%. And in order for that to happen, we don't want to get 0.6%. We want to get 0.9% in the mathematics of in the large scheme of the mathematics. We want to get a higher number so that this previous 0.9% can drop back very well. So that's how you view macro releases and statistics. Then secondly, now you then pair it and gauge it. So simple secret to how I gauge the market. I first want to understand what the economy is about before I come here. Because when you come here, you're going to be distracted by the numbers. Or a higher number is actually greater than forecast is good for currency. And then you just see actual greater than forecast, and then you just run and you enter the trade. What happens at that point in time when macro releases happen is they are aggressive retail traders waiting for that release. So that's why you notice that prices can move one direction immediately, and then the next moment prices are reversing on you. That's what happens because a lot of the trades that are taken during these releases are highly emotional and sentimentally based. So they are all waiting for the release. Higher number, everybody's clicking buy. Pop, 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 pop. And the truth about it is the banks too will help you fuel it. They will just put one huge lot size, one hedge fund somewhere, one guy just saw the news release and it's good. And he just opens up, a position of 300 million, and it's going to create huge impact in the market. And the truth about hedge funds that you people also need to understand is they are very fast. Their algorithms are very systematic. It doesn't waste time. They use something called HFT, high frequency. So the moment they see that, they activate their high frequency, and all they are looking for is 2% or 1%. And that 100 million immediately is going to give them maybe a hundred and something million, maybe 101 million, and they're out of the market. All they need to do is pull you along, string you along with them, and then they'll leave the market, and then all of you start struggling to continue pushing the market. And that's what you notice happens during macro releases sometimes that are not in alignment with what the economy is saying. You enter a trade, you're supposed to buy, but all of a sudden it starts to drag leg. There's no momentum in the market again. It did the initial spike and then dropped, but now it's not moving. That's because hedge funds and banks have already taken opportunity. They are very fast and they're out of the market. Now they've left the market for you retailers, and you people don't have the money to push the market. So we're stuck in that range. And then eventually what's going to happen? We're going to trap enough liquidity for them. And what's going to happen next? They'll come and take all our money off the market. They'll enter an opposite position from what we are in and take our money from the market. And that's how it works. Always. If you go back to your chart to go and back test it, go and look at it. That's why you notice that news will always do two direction nonsense. That's what it is. So if you notice that two direction nonsense, go back to the news and look at there's something happening. The news might not be wrong, but the deviation was not just enough to make the real investors stay longer in the market. That's just it. Okay. So on Tuesday, we have CPI, Canadian CPI, which they didn't have last week. So we have the Canadian CPI today. We're going to see what their inflation rate is like. So this is their trimmed CPI year on year. This is their median CPI. So the median is what you want to pay attention to. The trimmed is okay, we are working on it. The median is this is the balance. This is the balance sheet of what exactly it is. You see, this is the change in median price of goods and services purchased by customers. Then this is the trim. This is change in price of goods and services purchased by consumers, excluding the most volatile 40% of items. So the next question is, what are the volatile 40% of items? These are goods that are heavy duty produced. Okay, those are like things that are constantly being purchased in Canada. So you need to understand what the 40% of them are. That's why it's called trimmed. So you want to focus on the month on month. If the month on month is better, then it is overall going to affect, do you understand? Is overall going to affect how well their inflation is. So at 0.6% that they are forecasting, if you add 0.6%, if prices actually come out 0.6% added to the previous 2.7% that their year-on-year inflation is, if you add 0.6% of a month, you're going to have to break this down. Remember, it's just 1 month. So you're going to have to break it down. So you also need to find the deviation. So probably if it comes out 0.6%, their year-on-year is going to jump up to about 2.9%. If it jumps up to about 2.9%, it means that inflation is higher. So what is it going to tell you? Read the news again and see. Actual greater than forecast is good for currency. Now, it is good for currency. They never told you it's good for the economy. They told you it's good for the currency. The reason why it's good for the currency is because if inflation is high, the Federal Reserve is most likely going to have to do what? Hike interest rates. And if you're hiking interest rates, aggressive investors want to make more money. So your interest rate becomes what? Suitable for them to put money. Okay. So I'll leave you guys with that. Go and study. Go and study. Now on Wednesday is the day I'm waiting for. The Bank of Japan policy rate, which is their interest rate. These guys have the lowest interest rate in the world right now. It shows you how well they are thriving, that they don't need you to, they don't need your money. US on an average for the past 10 years have constant, I said the US, Japan and China, okay, in the past 10 years have constantly on an average been putting in about over a quarter. I don't want to be so specific with the numbers, but I know as at last year, China did about $538 million in treasury, in investment into the US. So these people are constantly putting in money. It means that they are making money. So they don't even need you to come and invest your money. Just leave us alone. We are the ones that will give you money. That's how fast they are growing. And that's why I say that the JPY is a safe haven, because it's one place that you know you can put your money, even if you're not getting any solid return, but your money is safe. The economy is not just going to spiral out of the blues and start having serious inflation issues or anything. It's always going to be calm and stable. So I'm trying to see how they can pull out from a a negative. You see, they are in less than 0.50%. So they are about 0.25%. That's what their interest rate is. Okay. And I want to see what their monetary policy statement is going to look like. If they are going to stay hawkish or they are going to go dovish a bit. If they are going to go dovish a bit, it means that they are most likely going to cut rates again, or they are going to leave their rates. But if they are going to go hawkish, they might hike their rates a bit just to bring in, a little bit of investors. And one thing that is going to dictate this for me is if the dollar continues to weaken, and if these guys, for any reason, I'll be honest with you, if these guys, for any reason, should hike their rates, I know there's problem on the dollar. Because side by side, how it works is this. When the dollar is weak, the JPY gets strong. I just want you to go and notice it. Go look at your chart. It's because when people don't invest in the dollar, they pull out their money to put it in a safe haven. So when the dollar is weak, you notice gold is strong, you notice JPY is strong, you notice commodities, basically silver, gold, and all these things, they gain strength because people pull their money to somewhere. Now, in this situation where the interest rate for the JPY is very low, is as good as saying the better. Okay, sorry guys. I'm starting to stretch too much into financial markets, but better when something is at a better level, it means that it has no consequential return value. Do you understand? The variance is very poor. So even if you invest your money, you're not getting as much as anything that you're going to get. You're basically just using it to hedge against an inflation. It's more like you're saving. So it's just like gold. Gold, I always tell people, is not an investment per se. It's just a hedge against inflation because at the end of the day, gold is still going to remain gold. If tomorrow the prices of gold should come back to $1,000, at where the prices of gold is going to come back to $1,000, the rate of inflation around the world would have dropped so well that your $1,000 can afford you what that $3,000 that gold is on today can still afford you. So your money is going to stay intact at the end of the day. That's just what it is. Okay. So those are some of the things. Then you see on Wednesday, we then have this early in the morning, which is midnight time, our time. Then we have the Oga of all Ogas himself. We have Powell coming in with the federal interest rate decision, federal funds rate, 4.5%, expected 4.5%. I personally am expecting him to leave it, honestly, because inflation dropped in the month of February. We saw inflation tank from 3% in January all the way back to 2.6%. And his major goal has been to keep inflation at a low of 2 point. He wants to keep it under 2.5% or 2 points. Yeah, he wants to keep it under 2.5%. And he's at 2.6%. So I don't really see a reason for him to want to hike interest rate or cut rates. If probably he can go below 2.5%, then he would probably cut rates in April. So depending on how well March plays out, if inflation drops in March again, then he's most likely going to cut rates by a point five base point or a 0.25 base point. Okay. So that's about that. I see a lot of people switching and leaving the call. You don't want to understand fundamentals. Your technical analysis can be there, and fundamentals will ruin it for you this year. So be careful. Okay, so this is like the major thing we're paying attention on, interest rate this Wednesday. Okay, and how is this going to affect our charts? So let's look at the charts. So two things are going to happen. Okay, if Powell decides to keep rates, we're going to get a stronger dollar. Because what's that going to imply? What's that going to signify and tell investors? It's going to tell investors that Powell is certain about his economy. And one thing that investors like is certainty. Smart investors don't like uncertainty, fear, and doubts in the market. They prefer to create it, but they don't like when they are not in the loop. Do you get? It's better if they are the ones creating it. So if Powell comes and talks about the monetary policy and states that, oh, everything is still working well in the economy, he likes how inflation numbers have gone low. He believes that if inflation should continue to decline at the rate at which he's doing, he's probably going to have to keep the interest rate the same until April, and then he's going to know if he's going to further more want to cut rates. And if he's going to cut rates for aggressive investors, they are going to run away from the market for smart investors, long-term investors, they are going to be interested in investing in the market. And at the end of the day, they are the ones that bring in the most money to the market. Aggressive investors they are like scalpers. Do you understand? They don't stay in the market too long. So the banks and the Federal Reserves are not too interested in whatever it is that they are offering. They are more interested in sorry guys. They are more interested in the long-term investors. You get. So if an economy is doing well, we don't necessarily need aggressive investors again. We need long-term investors, people who will leave their money for a longer period of time. So yeah. So if we see interest rates remain the same, then we're going to have a very solid bullish dollar. You would literally see this spike happen. Okay, if we remain at 4.5%. But if he cuts rates, it's going to weaken the dollar short term. Take note. If he cuts rates, it is going to weaken the dollar short term. We're going to see aggressive investors short the dollar short term. But in the long run, what you're going to get is a stronger dollar because at the end of the day, nobody wants an economy that is highly inflated. Do you understand? Nobody wants that. So if he actually does cut rates this Wednesday, you will get that solid sell off, and then all of a sudden you're just going to see buyers come back into the market because what that's going to do is he's going to increase the confidence level of the real investors, and then they are going to come back to start buying the dollar. And then what you're going to see is if he does that and he brings confidence back into the market, we might likely see we might likely see a covariance between stocks and the dollar start to rally to the upside together. And that's because they fell together. So they would have to rise together to get to a point of equilibrium, and then they would then disperse again. And then things would rearrange back to normal. But that's also going to be determined by what Trump says this week. Because that guy is just on a different level entirely. I feel like he's just waking up and he's like, I don't like this, I don't like this. Let's change it. I have the power to do what I want to do, kind of thing. But if tariff concerns is still on the rise, we probably will still see stocks falling. And why stocks are going to fall is because people are scared. First of all, if they cut interest rates, people are going to lose a percentage of their earnings. Secondly, dividends, people who collecting dividends to also lose a percentage of their earnings. Next thing you're going to see is people are unsure if companies will be able to produce as much as before. Would they be reliable? Because a lot of the things that are used for productions in some of these companies are imported. You import precious materials, aluminum, iron, and some of all those things from some of these countries. Okay, so how well are these companies going to operate? For companies who have major productions in China, in Japan, in Taiwan, in Korea, how is it going to affect them with the tariffs? It simply means that if you produce in Japan and in China and you're bringing it back into the country, you're going to pay a higher tariff rate. How are these companies going to respond to it? Producing companies, how are they going to respond to it? Companies in the natural and applied, like I say natural and applied science. Yes, yes, it's actually natural and applied sciences, basically, you know. So companies on the NASDAQ, how are they going to react to these things? Because they need some of these things to produce. It now means that their cost of production is going to go higher. If their cost of production go higher, will they be able to sell as much as they were doing? What is their total and net turnover in terms of their sales of goods and services going to look like? So all of these things are going to be a concern for investors, and you're going to see stocks continue to slide until they can actually find a balance and companies can actually also put their head around and say, okay, this is what is going to happen and this is how we're going to go about it before they can then start to solidify investors' confidence back into the market. If that is not there, then you will still see a lot of people panicking, scared, taking off profits, and then wanting to keep their money in the dollar instead of leaving their money in stocks. So you see people starting to edge more into safer investments like bonds. So you see people buy more of the dollar than invest more in companies. So that is that. Someone is asking a question. Okay, you're welcome. You're welcome. It's the little I can do to return back to life. But yeah, these are things that should be in my course, in my paid course. But yeah, let's make do with it. The most important thing is that you're listening and you're learning from it. Okay? That is the most important thing for me. So that's about it, guys. So I'm expecting to see probably, maybe manipulation, sell off and then buys, or we just break above and we continue to buy. But let's watch and see. Let's see how much orders are going to come into the market before CPI. So we're going to play it cool today. We're not going to do too much. Although I have eyes on this Euro USD. I have eyes on Euro USD. But I believe what we're going to see here. So let's make a quick analysis on Euro USD in light to what I have in plan. So what you're going to notice is we are in an accumulation at the moment here. Prices are accumulating here. But we also need to understand this accumulation that is happening here is happening on a key level. That's one. Secondly, let's go to the 45 minutes so we can see it better. Okay. Secondly, it's happening on a key level, which is valid, meaning that this is supposed to be a support level. So are we going to see prices go higher? Or are we going to see prices go lower? Now, the next thing we also want to identify is this market has been bearish. Have we, for any reason, shifted the market sentiment? Now, if for me to see a solid shift, I would have loved to see prices actually take out this low and then break this high. So we would have a very good shift. So we have a break of structure to a change of character. And then I would have identified a very solid shift. But nonetheless, this also would serve as a shift where prices failed to create a new lower lower low where we can then identify in smart money as a S, what do you guys call it? SMC, shift in market structure, or SMS, shift in market structure. Whereas saying that the market is no longer creating lower lows, but has also taken out this high. So valid to say, okay, we had some sort of shift here. But at the same time, is this shift coming from a valid place for me is another question. Okay, so it means that we are still bullish on the higher time frame. So we have lower highs, and then we have what? Another lower high here as well. So nonetheless, prices is reacting off this internal supply level here that did break all of this structure here to the downside. Is prices going to close above here? Or is price going to break below here? Now, for me, what I'm saying here is as much as we are stuck in this consolidation, I'm expecting two things that I believe is going to happen today. So we first want to identify that this was the highest point of the Asian session. So we have our Asian high here. So this is a good possible liquidity point. Secondly is within this minor structure here, if we go to our 5 minutes time frame, was there a shift that happened here? Yes. We had some sort of heads and shoulder pattern here. We saw prices break below here. And then this was the OB that did what? That actually took out this smaller time frame structure here. So let's see. The prices tap into this level. Yeah, it did tap into it. But if we're to refine it, would we say it tapped into it very well? If you go to like maybe your 1 hour, your 1 minute time frame, we might see the OB a bit higher. Now prices just stopped here. So what I am thinking is we'll probably will get a sweep of these Asian sellers, and then we'll have market run down to continue the sales. I personally think for one that the most valid liquidity, if the shift of structure here is valid, is that we're going to get more like a return. We need to get a return, okay, to where the, the change of character happened from, which is here, okay, which is this point. So we had this break of structure here. So this was where market shifted properly. We took out this lower highs. Okay, I mean this failed lower highs, failed lower low here. So we would have where would we have? Would have our OB at this point here. And remember, the one thing that validates an OB is what? Is the presence of what? Liquidity. And then we have this liquidity here. And this is also a retail level. So a lot of retailers are buying at this point, constantly doing what? Setting stop losses under here. And what's the market using the consolidation to do? If you were on the Q&A session yesterday, you know that basically they are just absorbing prices here. So that's what they are doing. So we might sweep Asian and then find a New York, we'll find New York reversal. You can see London is slow. London is playing. Okay, so maybe before New York, London would sweep Asian, and then New York will push prices down and then reverse it. So this is most likely what I'm looking out for on the Euro USD. But like I said, no pressure. It's Monday. If you notice, the whole market has been slow and moving because this week is a very serious week. If Powell comes and says something that people don't like, the whole market is going to turn upside down. You get so everybody's playing it safe. So the same way, play it safe. You don't have to trade if you don't see a trade. You don't have to force a trade if it's not moving. Just accept your L and move. We wait for when we see a good opportunity and we leverage on it properly. So that's that for my outlook session, guys, for this Monday. I really just wanted to focus on fundamentals because I've had a lot of questions on fundamentals. Oh, how do you view fundamentals? How do you use fundamentals? Well, this is it. And I feel like this is one fundamental video that anybody should come back and watch if you're trying to really understand fundamentals. So, what are we saying, guys? Are we good? Okay, so that's about it. If you have a question, you can leave. Let me just answer one question. And let me be sure that we were all listening on this call, please. If you followed through and you were able to learn a thing or two, just leave something in the chat section for me. Let me be certain that you did. I should upload the video. If I upload the video, will you share it? And share your efforts. If I upload the video, will you share it? I will upload the video. I'll upload the video. Okay. Okay. Okay, then no problem. I'll put the video up on my YouTube so you guys can go and rewatch it again. Okay, don't forget if you've not joined my YouTube channel, it's Ryan Can Trade FX on YouTube. Just just go ahead on YouTube and type it and check it, and then you can follow and watch other videos. There are other videos on fundamentals on my YouTube channel as well, and you'll be able to.
So I have a question.
Yes.
So, under normal SNC speculation, it is
Yeah.
very assumed that a shift in structure had to be break a level before, shifting that structure, creating that other block before we
Mm-hmm.
can properly assume that, okay, this shift in structure is valid.
Okay.
But just like the way you speculated, this particular level
Mm-hmm.
that you mark does not really break that particular low. So
Yeah.
is it safe to speculate that okay, um for a while now, Euro USD has been bullish and somehow it will get to a point where it will exhaust itself and
Mm-hmm.
you know market need to balance and come back to a point where both sellers and buyers need to agree, okay, buyers is exhausted, let's allow the sellers to participate in the market for a while, then before continuing to his preferred direction. So for me, I've been looking at Euro or pairs XXUSD to at least sell at least to a 50% or 0.68% before it will. Now, of course, there is this accumulation here, and if you also notice too, there is this, funny change of character. For me, is it safe to say, okay, this particular um peer comes to tap at this OBU marked at this supply
Mm-hmm.
so that it will sell? Because for me, marking this particular low that fails to, shift in character is looking more like a liquidity for me. So
Yeah,
what do
it
you
looks
think?
it looks it looks like a possible liquidity grab, yeah. Now
Yeah.
the only reason why the only reason why this shift makes sense, okay, is
Mm,
because at the end of the day we are still bullish
normal.
when you look at the higher time frame. Do you understand? But something is here as well. And it's why I always tell people that the way I trade is very simple and easy, yeah. I run through structure, liquidity, patterns, price action. Do you understand? I always look at patterns. Now, we are we are at an extremely overbought level on Euro USD. Not just are we at an
Exactly.
extremely overbought level on Euro USD, but we are also in a daily level. Okay, we tapped,
Oh, oh,
we cleared
oh,
this liquidity here
that makes sense.
of position sellers. We swept them already. Remember my entry level from NFP was above here. I told you guys I was going to sell from here. So we bought during NFP. This was NFP. We bought during NFP and we hit my TP during NFP. If you held the trade from NFP and you didn't slack, we bought up to my TP. And what happened during CPI? I sold during CPI last week Wednesday. I don't know if you were on the calls, both calls, you should remember we bought NFP and
Yeah.
sold CPI.
I was in the call, sir.
Uh-huh. So now the thing here is, what am I looking at? Prices are exhausted, but not so exhausted on the daily. So I'm not going to be extremely confident. But on the 4 hourly, I can see that, you know what, prices is showing signs that it's still bearish. Do you get? And we are headed to we're supposed to be going to the downside. So what I'm more focused on right now is what exactly does prices want to do at this point? Because you see, we squeezed this pattern here, broke out of it, retested it, and we are just in this range here. So the next question here is the most valid point for me to now say, okay, you know what, I'm going to stay bearish on this market is if I can get prices to actually break this level.
Mm.
If I can
And
break
come back.
this level, if I can break this level solidly and come back and break this level again, this one again, then I'm good. I know that I can stay bearish on the dollar for a while, at least up until 106 level again
Yeah, 50%, 68%.
before I can now continue looking for those buys again. So that's how I'm looking at the market right now. Because all this now is just it's just a whole lot of noise. But within the noise, you can still tell and say, okay, this entry level was right. Or worst case might be we'll see prices go back here and then give us what? Give us some sort of double top again here and then dump. And if that happens, it's going to look like this on your 4 hourly time frame. What are you going to see on your 4 hourly time frame? A double top. So let me clean this. I don't want to clean all of this because this is the chart we used from NFP. So let me do this. Okay. What are you then going to see properly on the 4 hourly time frame? You see what? A good double top with what? A solid neckline. Am I making sense?
And the pattern is also giving, sir. It's also giving like S and shoulder.
Do you understand? It's also giving like a heads and shoulder pattern too. But worst case scenario is prices buys into this level again, and then you're just going to have neckline, and then you're going to sell off. And one thing that is consistent, you also need to learn, you also need to study. One thing that is consistent with Euro USD is Euro USD likes double bottoms and double tops.
Oh.
You have to study these things. Double top. Can you say it?
Yeah, yeah, yeah.
Double bottom. Can you say it?
It's visible, sir. Especially at the reversal point.
Yes. Top, bottom. So it is an evident thing for the Euro USD when it wants to reverse. Can you see? Every time it wants to reverse, it is an evident thing for it. They might not be perfect double bottoms. This particular double tops and double bottoms, I like to call them advanced patterns where they are like slanted and inverted kind of thing. Is where your break or structure change of character idea comes from, kind of thing. So yeah, so things like that. So it is something that is consistent with the Euro USD. So if for any reason if for any reason this doesn't work, what we're going to see is we're going to see prices do what? Go back to create that double top, and then we're going to sell off. Mark it and keep it. Use it as you deem fit. But go back to my YouTube channel 2 weeks from now, 1 week from now, and see if this happens or doesn't happen. I always tell you guys, if you are going to do something, be bold enough to do it to the best of your ability. And if you fail or you're wrong, accept that you were wrong and move forward. If I'm wrong, no problem. But if I'm right, come back to my dear. So that's that. Okay?
All right. Thank you, sir.
No
Thank you,
problem.
sir. Thank
No
you, sir.
problem. So
Now,
thank
please, I
you.
have a question.
Yes.
I have a question. So, like now, are we supposed to wait for the buy to happen first, then before we take the sell?
Well, honestly, yeah, at the end of the days, you can risk anyone. The most important thing is your risk. If you want to enter these sales now, how much are you willing to lose on these sales? And if it doesn't go your way, would you accept your loss and move? Or would you try to revenge? because these sales might happen, the sales might not happen. It might just continue buying because, like it or not, now looking at it from a higher time frame. Let's delete this. I don't want this video to be more than 1 hour 20 minutes. But yeah, looking at it now from this level, yeah, there's a
Yeah.
level here. Do you understand? There's a level here, and prices are just seated on this level here. Okay, so now let's ask ourselves: do you think prices would sell from this level? Because I actually took the sales, and now that I'm looking at it again, I'm actually closing my sales. Like I'm just going to take my loss because I was on the sales earlier on this morning. When you look at it from your phone, it's giving this it's giving this look of I'm supposed to sell off kind of thing. Do you get? But
Exactly.
but when you look at it now on this chart, it's not giving I'm going to sell off because you have a resistance here that is turning into a support here. You have a resistance that turned support, turned resistance, and is turning into a support here. You have you not only have that, but you have candlesticks that are telling you a story. Rejection, no enough momentum here. This was a strong bullish candle that broke above this level. Sellers are sitting on this level and prices are on this level. So it's telling you a story of I'm not going to sell. Oh, I'm going up to this level again. Now, if you look at the DXY, I also did map out what that I'm looking for prices to still come back to this level. Because now I have a very good shift. I had a break of structure here and I saw prices rally up to this candle breaking above this level here. So I have like a fair enough, would I call it sort of a change of character, but I only validate change of characters after prices respect an OB. So if prices can come back to this level here, then you understand that now the market shift is now going to be proper and is also going to affect how this double top is going to look if the XY gives us a double bottom. Am I making sense, Emmanuel?
Yes, yes, very well, very well, very
So
well.
looking at this chart now, if you were to enter a trade now, would you enter a sell or a buy?
Honestly, I would think, yeah, I think a buy should be good, and then, yeah, yes, 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 I think a buy should be good to that entry level that you marked.
So that's what's up.
Yeah. All right. Thanks for the answer. I
No
really
problem.
appreciate.
No problem.
Yeah.
So that's about it, guys. I'll send in trade setups within the week. I have a few things to settle this morning. I have to go out to settle a few things. But if you're on the call, let's leverage on Euro USD. Let's play it safe, okay? Don't put your stop loss under don't put your stop loss under this range on the 15 minutes time frame. So where you want to put your stop loss is where you want to put your stop loss is you want to put your stop loss under this OB here. Don't put it under this range because prices can just sweep you into the OB and move. And the best places to place your entry, honestly, is to place your entry where every other person have their obvious stop losses. So this right here, as much as it's a buy, don't place the buy now. You see what I'm telling you? This is 10 o'clock and this is 9 o'clock London session. London just opened. Just watch how they are going to play with the whole market. So we're going to take these buys at 0.8500. Okay, that's where we're going to take these buys. We're going to have our stop losses under 1.08 300. Okay, so we're going to be leveraging on a 25 to 30 pip stop loss. Okay, and we're going to target 85 pips take profit. Okay, so that's about that, guys. So this is going to be our first trade for the week. Okay, so let's do with that what needs to be done. Don't buy now. Don't buy now. Okay, don't buy now. I just gave you a trick. Everybody buying has their stop loss here. Wait for them to pick their stop losses. When they pick their stop losses, then you can enter the buy. Wait till you see this market acting as if it's selling. It's really not selling. It's just going to sell off and clear their stop losses and then buy. So that's about it, guys. If you enjoyed the session, let me know you did. Oh my God.
The session was good.
In summary, this is giving like power of three patterns. So
All these you people's power of three and this thing you people are talking about, I don't used to involve myself. Don't come and be confusing me. But I believe the power of three is just basically accumulation, manipulation, and distribution.
and distribution,
Yes,
yeah.
yes, yes, very well.
Okay, okay. You're welcome. You're welcome. You're welcome, Josh. So yeah, we do this every Monday. Next week, Monday, we're having tea and chats. Okay, we've not had tea and chat in 2 weeks. I traveled, and our guest for this week also was returning back to the UK, so she couldn't make it. But next week we're going to have our guest on on the call. So can I type the setup? Okay, I'm going to send it. I'll send it to the group. I'll send the setup to the group. Okay. Let me even send it now so I don't forget because I want to shower and go out now. Okay, bye guys. I'll see you guys Wednesday midweek outlook. Okay, so we're going to trade CPI as well on Wednesday, as always, and let's see if we're going to make some money. Okay, so far so good. We've had 4 sessions, no losses from January. So let's continue on the winning streak.